Tesla has so captured the imagination of investors that earnings may not even matter anymore. I'm Jack Otter, editor of Barrons.com. I'm here with Ben Levisohn, a senior editor at the magazine. You've been watching Tesla from the beginning, and you have an interesting thesis that upcoming earnings on August 3rd don't really matter for believers in Tesla.
That's right. I mean, we see this every time that they release a number. In most stocks, you beat earnings, or you beat deliveries, or you miss earnings, you miss deliveries, those kind of stuff. It's pretty easy to predict where the stock is going to go. With Tesla, you really can never know, partially because these numbers, if you're betting on Tesla, you're betting on such a long-term future for this company that from quarter to quarter, it doesn't really matter what it's doing. Things like cash burn might matter. Things like, whether they need to do another equity raise, maybe that matters. But these things, you can't value Tesla and look at it in the same way that you do most other companies.
And even people who differ think that it's going to be a loss. It's just whether it'll be 51 cents a share, 78 cents a share, whatever.
Exactly. I mean, it's still losing money right now.
Now, the thesis for Tesla used to just be how many electric cars could they sell. Now it's more complicated, right? It's not just an electric car company, it's an electricity company, it's a battery company, it's a space company.
That's right. I mean, it's, if this merger between Tesla and SolarCity, both Elon Musk companies, goes through, you have a company that's making cars, making home power storage units, making solar panels. And it gets it's a complicated story. Before it was very simple. It's like Tesla makes awesome cars. They're going to take on the big three automakers, and it's going to make a wonderful thing. It's the Apple of cars. Now it gets to be a harder story to tell. It's cars. Are they going to make solar panels that are cool looking now? Or it's hard to know, and I think that makes the story, the narrative, a lot more difficult.
Now, there's another aspect for investors here, which is more technical in nature. The stock is so heavily shorted. There's so many skeptics that it's actually hard to short. Can you explain that?
Yeah, I mean, when you short a stock, you just can't say, I'm going to sell a share. You have to borrow a share. And the cost to borrow Tesla shares has gotten very high, to the point where if it doesn't go down a massive amount, you're going to lose money on
and that
short.
Could actually, in a perverse way, push the stock higher, right? There could be what's called a short squeeze.
Exactly. I mean, if there's, all these people are feeling this pain from the stock going up, and they're paying these high costs to hold it, at some point, they might just have to throw in the towel. So it's hard to know, exactly how the shorts are influencing what's going on. People got massively short when Tesla announced that it was going to buy SolarCity, and I think the stock actually, after dropping some, is probably right around the same place, maybe even a little higher.
Now, Barron's was burned a while back for being skeptical on the stock when it was around 100. Now it's around 200. With humility, realizing that our crystal ball is not crystal clear, what's your prediction?
I mean, this is the hardest one to call, because on the short term, I have no idea. Because it just moves on so many different sentiment kind of things. I do think that ultimately our thesis is going to be correct, that there's just too many moving parts here now. There's too much, the company's just burning through too much cash, that it's just not going to be a great long-term investment for people. But that being said, if you're a fan of this company, go ahead.
And the car is pretty nice.
The car is very nice.
Thanks, Ben.